With no meta-commentary, no stage directions, no references to this video, and no structural markers. Just smooth narration exactly as you requested. Script start. IREN closed the week at $47.81, finishing Friday slightly lower by a little over 1%. It was a quiet end to what has been one of the most uncertain stretches for the stock in recent weeks. There were no major headlines on Friday, no new announcements from the company, and no sector-wide catalysts that pushed the stock in one direction or the other. It was simply a muted trading day, and sometimes these quiet sessions reveal more than the big, dramatic ones. When a stock is no longer falling sharply but not yet rising convincingly, it often means the market is in the middle of reassessing, waiting, and deciding what comes next. And that's exactly where IREN sits right now. The story of the past few weeks has been defined by volatility, immense expectations, and sudden reversals in sentiment. Earlier in November, IREN was riding high on the enthusiasm generated from its massive multi-year artificial intelligence cloud contract with Microsoft. This deal, worth up to $9.7 billion over 5 years, created enormous excitement among investors. It represented one of the largest cloud infrastructure partnerships ever secured by a company of IREN's size. Overnight, sentiment shifted from cautious optimism to full-blown excitement. Investors began treating IREN not as an emerging infrastructure company still building out its capabilities, but as a fully formed AI powerhouse ready for near-instant revenue expansion. But markets often get ahead of themselves, and with hype comes pressure. Expectations didn't just rise, they skyrocketed. So when IREN released its earnings, the market wanted immediate clarity. It wanted proof that the company could already generate meaningful revenue from the Microsoft deal. It wanted evidence that margins would expand quickly. It wanted rapid deployment, rapid scaling, and rapid results. But IREN is in the early stages of one of the most capital-intensive transformations in the technology sector. Transforming from a high-powered compute and mining operation into a large-scale AI cloud infrastructure provider requires enormous upfront investment, long construction timelines, and extended periods before major revenue can be recognized. When the earnings did not deliver the instant financial transformation investors were hoping for, the stock was hit sharply. Heavy operating costs, higher depreciation, and the looming possibility of future dilution created fear. Analysts raised questions about execution risk. The entire AI infrastructure sector showed signs of fatigue. And over a period of days, IREN fell from the mid-70s into the low 40s as sentiment flipped from euphoria to caution almost overnight. But the market rarely moves in a straight line, and earlier this week IREN showed its first sign of strength in a long time. On Monday, the stock surged more than 14%, marking its strongest green day since its previous highs. This move didn't reverse the downtrend, but it did show that buyers were willing to step back in at these lower levels. The selling that dominated the prior weeks had finally met enough demand to trigger a rebound. This wasn't just short covering, it was a definitive sign that the market believed the decline might have gone too far, too fast. The next day, the stock experienced a quieter consolidation session, and then on Wednesday it closed up again, this time around 2%, and even gained additional traction in the after hours. This was an important moment because the move wasn't amplified by headlines or driven by hype. It was purely organic buying. Stocks that are truly weak don't hold gains. They give them back instantly. But IREN held. That signaled a change in tone. A stock that had been acting like it was in free fall was suddenly acting like something trying to stabilize. Then came Friday. After such a turbulent period, many investors expected either a continuation of the rebound or a sharp rejection. Instead, the stock closed slightly lower in a tight range. This kind of calm behavior is often easy to overlook, but it's one of the most telling signals in the market. A stock that refuses to break down after a large rally is usually indicating that selling pressure is weakening. The panic is gone. The urgent selling has stopped. And what remains is the quiet back and forth between long-term investors who are positioning themselves for the next phase of the story. IREN's price action on Friday fits this pattern perfectly. The stock didn't collapse despite a lack of fresh news. It didn't rush higher out of excitement. It simply held its ground. This is what early stabilization looks like. Not a huge surge. Not a dramatic reversal. Just a stock that is no longer falling and is now waiting for its next catalyst. This raises the larger question, why is the market behaving like this? Part of the answer lies in the broader context of IREN's transformation. The long-term thesis remains extremely compelling. The world's appetite for artificial intelligence computing power is growing at a historic rate. Companies that can deliver large-scale GPU clusters, hyperscale data centers, and reliable AI cloud infrastructure are positioned to capture significant value in the coming years. IREN is one of the few companies building capacity at this scale. The Microsoft contract alone places the company in an entirely different tier of strategic importance. But the challenge is execution. Building out AI infrastructure is expensive. It requires large upfront capital expenditures. It involves long lead times before revenue can be recognized. And it creates periods where costs rise before profits follow. This dynamic is uncomfortable for short-term traders but normal for high-growth infrastructure companies. That's why some investors are bullish and see the pullback as an opportunity, while others remain cautious. Prominent critics have pointed out the risks. Some believe that taking on a $9 billion commitment with a hyperscale partner could stretch the company too thin. They point to the possibility of dilution, the risk that margins may be thinner than expected, and concerns around financing. These arguments aren't irrational, they highlight the real pressures IREN faces as it grows. At the same time, many long-term investors argue that the future upside outweighs these concerns. To them, the current price reflects pessimism rather than an accurate picture of the company's long-term potential. All of this sets the stage for this weekend. With no new announcements from the company, and with the stock settling into a quieter pattern, the market is left to interpret the signals on its own. Investors will spend the weekend asking themselves the same question: is IREN forming a base, or is it simply pausing before another move? The answer will depend on what happens next week. Several key factors will shape next week's price action. First, whether the stock can hold above support levels in the mid-40s. Second, whether relative strength appears, meaning IREN performs better than its sector on down days. Third, whether any news emerges regarding data center expansion, GPU deployment, or revenue recognition tied to the Microsoft contract. Even a small positive update could shift sentiment significantly. For now, IREN enters the weekend in a state of balance. Not in crisis. Not in breakout. Just balanced. And in the market, balance is not a sign of weakness. It is often the calm before momentum shifts. Whether that shift is higher or lower will depend on the next set of signals. But the chaos of the past 2 weeks has faded. What remains is a stock that has stopped plunging and is now holding its ground. IREN's story is far from over, and the quiet way it ended the week may be the most important clue of all.